Hello everyone, tonight on the program, Bank of Ghana makes significant progress on issuance of digital currency.
We'll have
we'll be hearing from the governor of the central bank, Dr. Ernest Anderson, in the course of the bulletin. Also, former finance minister said Tekwe calls for comprehensive approach in dealing with Ghana's rising debt stock.
One, you have to increase revenue, right? Yeah. And the revenue that is going to come is external. It's not coming from within GRA, restructuring GRA, because otherwise it wouldn't be stagnant.
Also tonight, Private Enterprise Federation welcomes reduction of policy rates by the Monetary Policy Committee and says it anticipates an immediate impact on lending to businesses.
Real culprit that we have to work with is how to find the balance on the policy rate, influence on the lending rate of the banking institutions or the lending institutions.
This is Business Live. My name is Darryl Kwao. Details in a moment. In our first story tonight, the Bank of Ghana says it has made significant progress on the issuance of a digital currency. According to the governor of the central bank, Dr. Ernest Anderson, it has completed the design of the electronic cedi for initial market use.
Looking at the concept of an cedi. So yes, we are quite advanced in that process. As you know, these types of things, you have to go at it in phases. The first phase was really on the design of the electronic money, and I think that the team that is working on that has gone quite far in the design phase, and they are looking at the implementation phase. And after the implementation phase, we would have a pilot phase where a few people would be able to use it and use this electronic cedi on the mobile applications and other payment applications that are currently running. And then from that pilot, we would be able to determine whether this is feasible and what sort of things need to be tweaked in order to make it work effectively. So, yes, we have made progress. I think we'll be putting out some more information on that very soon. The cryptocurrency, I think we all are aware of what has been going on. And we have said that this is not regulated activity in the Bank of Ghana, so we warn the public about engaging in the cryptocurrency trade. You have seen the sharp changes in valuations of some of these coins, the Bitcoin, large swings in the value of a currency. Now, the basic function of currencies is for them to be used effectively as a medium of exchange or even as a unit of account. So when you have a currency whose value is so unstable, really, you really cannot use it effectively to meet any of the standard functions of money. And this is why I think there's a lot more emphasis on looking at digital money, which is backed by the state, backed by the central banks, because these private forms of money really are not able to effectively perform the functions of money effectively.
Governor of the Central Bank, Dr. Ernest Addison. Now, former Finance Minister said TECPA is calling for a comprehensive approach in dealing with Ghana's rising debt stock. The country's debt stock has gone up by 13 billion cedis to hit 304.6 billion cedis as of March this year. Now, according to data from the Bank of Ghana, this is equivalent to 70.2% of gross domestic product, lower than the 76.1% of GDP registered in December 2020. Speaking on the marketplace, TECPA said the Ghana Revenue Authority in particular must be armed to help mobilize revenue to bridge the debt gap.
One, you have to increase revenue, right? Yeah. And the revenue that is going to come is external. It's not coming from within GRA, restructuring, GRA, because otherwise it wouldn't be stagnant. So what is going to come is, let's say it's a bonanza from, external. It was external that caused the crisis. External is coming too, but we need some reforms on revenue generation. Then you have to tackle expenditure because it is the combination of the two that gives you your deficit. So if expenditure is not going down, and we continue as a nation to spend as though we were in normal times or under the same scenario, I'm afraid the deficit will not go down. And therefore, as long as your deficit doesn't go down, it means that you are going to borrow. It's not going to abate. And if you borrow, and if you are channeling much of the revenue that is coming because it's not much, into expenditure, then it means that you are also not putting money aside for building capital for the capital budget, and also you are not putting money aside to reduce the debt, and so all these variables have to come in and play. And then when something external happens, it becomes a boost, and then you can use that to address stabilization, of the economy. So we need a total program, and it's not enough to be picking on say just one, like a national identification number or whatever. It must be total. It must be complete in the sense of GRA being moved to the revenue modernization phase. So a lot is being done, by GRA and the government. I must, but I'm saying it is not comprehensive. We don't have a total package as we do have in, say, the homegrown situation, or as we did have if we had IMF programs and the rest. We don't have that yet.
All right.
And we are moving towards the second half of the year, and it's running late at least, for 2021.
In other news, the Private Enterprise Federation has welcomed the reduction of the policy rate by the Monetary Policy Committee and says it anticipates an immediate impact on lending to businesses. The Bank of Ghana slashed its policy rate by 100 basis points from 14.5% to 13.5%. But speaking to Joy Business earlier on the marketplace, President of the Private Enterprise Federation, OSEI-BONSU, said more can be done in easing the cost of credit.
It's in the right direction. Because, you see, the policy rate is supposed to dictate the lending rate by the various lending institutions. But the policy rate in itself has some skewed elements in it that should not be there. Something like cash in bulk. Because apart from the policy rate is formulated, there's a formula that dictates the policy rate. And that formula has cash in bulk, glorifying a bank takes somebody's deposit, they don't know what to do, put it in the vault, and you glorify them a percentage profit margins on that. That is a no-no. That should not happen, be in there. And then the capital adequacy. These are things that the Bank of Ghana should make sure that they're not in the formula. Because if we look at the policy rate, which should have a correlating effect on the banking rate or lending rate, it's not doing that. So you have a margin of almost about 400 to 500 basis points from the lending rate to the policy rate, or from the policy rate to the lending rate. So we think that, yes, it's in the right direction, but the real culprit that we have to work with is how to find the balance on the policy rate, influence on the lending rate of the banking institutions or the lending institutions.
Hopefully, we are expecting that we would see banks readjust to reflect the decrease in the policy rate. But I just want to know, how upbeat is the business community about this? What is your expectation? What is the anticipation as we expect this to stimulate the economy, enable businesses get some monies to run their operations and stimulate the economy? Are you as excited as the others are about what this would mean?
We're not jumping up and down in excitement. but it's
Definitely.
in the right direction.
Okay.
And as I said, that adds up to decision-making process, which is very critical. So the policy rate is in the right direction, it's being reduced, and we want to see a further reduction where you see the policy rate would influence the lending rate directly. There's a direct correlation between that. So businesses can now plan and say, okay, the policy rate is reduced to maybe 10%. We know the margin between that and the lending rate is going to be this much. So now, do we go to borrow now, or we wait till it reflects in the lending rate? So that is where we want to see some immediate action.
We'll still say with the review in the policy rate because Chief Executive of SG Bank Ghana, HAKIM OUZZANI, has welcomed the decision by the Bank of Ghana's Monetary Policy Committee to reduce the policy rate. He has told Joy Business that the bank has already taken steps to comply with the new policy directive.
If you have certainly observed that the trend of the rates in Ghana is progressively going down, okay? It means that just in few years, we can say that there are hundreds of basic points lost in the interest rate, which is good for Ghanaian people, for Ghanaian companies, because they are able now to borrow money cheaper than a few years ago. But it's not the end of the road, because the government and Bank of Ghana strategy is to continue till we will reach the one-digit interest rate. And my hope is that it will happen progressively, once again, taking into consideration many also, you know, because it's not easy. It's more easy to say than to do. But what is good is that the trend is there. So, you know, a few years ago, I think in 2016, I'm not sure that I have the right figures, but in 2016-17, the monetary policy rate was at 25%. You know, so the difference is very big in less than 10 years. So, and continuing this way, we can really expect, and we will be happy to see that this trend will continue, and the final beneficiary of this trend will be the client,
Are the banks ready to comply? Are you ready to comply to also bring your rates down?
We are already complying. The interest rates we are doing today have nothing to do with the ones we were doing a few years ago, you know, for individuals and for companies. It means for enterprises and companies. The rates are really below what it was. Compared to some other countries, the rate's still high, once again, because you cannot change the trend in 1 year. Sometimes it is 5, 10 years, even sometimes more, to really, because if you do it in a short period, you will hurt the global mechanism of the industry and sometimes of the economy. This is why it's also prudent to do things with a good and a right vision of the future, but to do it by step, so that you will achieve the target of bringing the rates down by no sacrificing something big aside, you know.
On today's edition of Money Lab, we are going to be looking at how investors can conduct a simple assessment on an investment in order to be sure that the investment is genuine. The first thing that investors need to look out for is to ensure that the returns that they are being promised is consistent with the risk that they are taking. If you are taking a higher risk, then you need to be promised a higher return. Secondly, they also need to know how easily that investment can be converted into cash, and this is what we call liquidity. Anytime you are having an investment that you can easily convert to cash, the returns on that type of investment tend to be lower. On the other hand, with investments that are very difficult to convert into cash, the returns are higher. In addition to these things, it is also very important for you to know about the track record of the company and the people behind the company. It is also important for you to also understand exactly what your money will be used for. Join us in our next edition of Money Lab as we continue our discussions on investments.
Welcome back. You're watching Business Live. Now, as part of measures to increase access to insurance in the country, SG Bank and Allianz Life have signed a deal to sell 2 critical insurance products to customers of the bank. Now, the deal was signed in Accra after approval from the Bank of Ghana and the National Insurance Commission for 2 products, Sound EduFlex Plan and Sound Funeral Plan. Here is a report.
The insurance industry has seen some marginal growth in recent years as a result of the move by both the Bank of Ghana and the National Insurance Commission to grant approval for banks and insurance firms to provide the service. The partnership between Allianz Life and SG Ghana to sell 2 products is expected to improve the current development by capturing more customers of the bank. Head of Reinsurance and Money Laundering at the National Insurance Commission disclosed that more than 30 insurance companies are collaborating with banks in this regard.
In 2007, when the first partnership was approved, I'm happy to say that currently more than 30 insurance companies, both life and non-life, are collaborating with several banks 14 years down the line. Premium contribution from these partnerships has been encouraging and keeps improving. Out of a total premium of about 39 billion cedis in 2020, bancassurance contributed 17%. This was made up of 2% for non-life and 15% for life.
Chief Executive of Allianz, Gideon Atarari, explains the importance of the 2 partnerships.
Partnership where together these 2 big brands will be able to create a one-stop shop for the SG customers. So customers have a lot of needs. They have savings needs, they have investment needs, they also have insurance needs. So what this brings is it puts everything in one basket. So the customer doesn't need to go to that place when he needs life insurance, goes to this place when he needs investment. Everything is in one basket. So that's about and on this platform, we've launched 2 products today, and one is about funeral, and we know how important it is for when our people depart, how important it is for us to give them a befitting burial, a befitting farewell. So we've launched a product like that. Then we've also launched a product around education. But these are just the 2 of the products that we have today.
General Manager for Retail at SG Ghana, Obed Hoya, believes this is an added value to customers.
These are 2 giants in their own fields. Allianz has over 130 years of experience behind them in this business. SG Ghana or SG Group also has over 150 years of being in this banking business. You put the 2 together and you bring a lot of experience to bear. So the 2 have come together to really bring convenience and value in creating these 2 very useful, unique products to sell to our customers and prospective customers.
Out of the total premium of about 39 billion cedis paid in 2020, bancassurance contributed 17% according to the Insurance Commission data. Ebenezer Sabute's report for Joy Business.
Now, Consolidated Bank Ghana has begun a training program to enhance the strength of its core staff in the credit risk management portfolio. The program is aimed at helping beneficiary staff with additional competence in dealing with small-scale businesses to reduce high risk of non-performing loans in the sector. Here's more on the academy.
The Consolidated Bank Ghana Credit Risk Academy is part of the goals and strategies by the bank to trigger some reductions in non-performing loans from the small and medium enterprises. According to the Chartered Institute of Bankers Ghana, this is the maiden training program a commercial bank in the country has instituted for their staff to enhance their strength. Here is Managing Director of CBG, Dano Ado.
Credit Risk Management Academy is critical because it enables and provides tools for our staff to be able to understand the credit management process, to be able to originate good credits, but most importantly, also to offer good business advice to our customers. Now, that's very important, particularly given the concentration on SME, small business, local businesses. You see, it's not just about offering them credit. It's about offering them credit that helps their businesses to grow. It's about meeting them in their time of need, but it's also about giving them advice how to run their business, what kind of facility is appropriate for the business at any point in time. So this, for us, is a key pillar of the strategy and the way we want to manage our risk.
And that's Business Live tonight. Thanks for watching. My name is Darryl Kwao. We're back same time tomorrow.